into the summer. It's Tuesday, August 12th. It's just a little bit after 12 noon, 20 after 12, and we're here with another edition of Chart the Markets. My name is Mark. I'm from Blunt House Technical Analysis, and I'm here with my good friends from FEG Token and SmartDefi.com. I suggest you check out SmartDefi.com. And our exchange partner, BYDFi, and a link to BYDFi is available on my X profile, which is at Blunt420, and you can look for at Blunt House Technical Analysis and Blunt House TA on YouTube, and it's all there, along with all of our videos that we've done. So if you want to go back and see something that maybe we talked about before that you want to get caught up on or have another look at, it's all there for you. Today, we're going to try really hard, and we're going to try and keep it simple. Sometimes less is more. Sometimes it helps to see less on your chart. And, I'll be the first one to admit that when we do these sessions that at times it might look a little busy because, when we start adding things like a few moving averages and whatever else we're throwing on there, it can look a little confusing. So we're going to try and keep it as simple as we can. And what's on the chart right now is we're obviously looking at FEG token on a daily, and the only thing we're running is the Blunt House script, and we're just lighting up the T line, which is the 8 EMA for those that don't know, and the 5 EMA. And our script will give us entry and exit signals, and you'll see them in the forms of those arrows. That's all that's on the chart right now, and of course our volume profile. The reason that I want to kind of pull this back a little bit is to simply, and I kind of caught myself doing this a little bit too, because we're all human, right? These things we encounter every single day, and I caught myself focusing too much on some targets that I had laid out for myself, and I found that while I was focused on the targets, I missed some stuff in between, and I didn't actually get to where I wanted to go on that trade, and I realized that I was just focused on the wrong stuff. Right? That happens to us. So when I catch myself doing that, the first thing I do is just turn stuff off. So is all we're looking at here. This is a daily chart of FEG token, the T-line 5 EMA, and a volume profile. Our volume profile gives us the upper value range in this form of this thin blue line and the lower value range. This is where the bulk of the trading sits, in that blue dense area. This is light trading. We know that current price looks for past, right? In the event of an uptrend, current price is looking for past price. In the event of a downtrend, same thing. And what the volume profile does for you is it helps paint a range. And that's helpful unto itself. So on the daily chart, and this chart, although I've blown it up, really has just gone sideways. And, I think it was last Thursday, we talked about this chart, saying it's just a matter of time before you get a breakout or breakdown. That's just what happens. We have three choices, right? Up, down, and sideways. Well, this was the sideways option. So what's that leave us with? Up or down. And assets typically like to go up more than they like to go down, at least in the stock market anyways. So here we are with a defined range. There's the lower, here's the upper, and then there's the point of control, which is averaging of all this past price that we see on this chart, is averaging it all along that level. So you came back and you tagged yet again that lower value range and held. And those are typically good opportunities to look for buys. You have no idea what comes after the current candle that you're on, but the setup is there. So this is what we would have seen. That was Thursday's candle, the last day we did the stream. And then on Friday, we get a confirmation candle on the daily telling you that, hey, that's your buy signal on FEG. Formed a little bit of a double bottom as well off that lower value range. These are real simple things, right? Wow, this equal bottoms, that's sign of support. Where did that happen? Yeah, at the lower value range. I'm going to interpret that as good. And then what happens? Your 5 EMA, which is this one, goes from red to white, telling you, hey, there's some money coming in. And it flags it for us. And a couple days later, we get our buy signal, and that divergence that we talk about that shows us which direction trend is in, it shows up. And it looks like it wants to move higher. Does this feel, if you were trading this, if you had expectations of things happening quickly all the time, would this feel like watching paint dry? Probably. Think about it, what it felt like to watch the whole thing go flat like that. But you have to be patient. There's your little doji candle that might scare some people, and then, oh, another big red candle. But look what happens. The divergence between the T line and the 5 EMA sticks. And when it sticks, you can stay in the trade. Then it starts to get real. Did you notice how this is held? So what are these? Are these just red candles in a further uptrend? Yeah, that's all they are. You don't have to stress out about it. They're just red candles in an uptrend. Now that gets your attention. But you hold. And this is where you have to trust your charts. Right? It's not an easy thing to do. And this is why you have to detach yourself emotionally from what you're trading. The psychological game that's going on in your own head, whether you're aware of it or not, is tremendous. That's what, using the signals helps filter. Is all the nonsense that goes on in our own head. This was clearly on FEG an early entry. Notice the wicks here pushing price up when it did pull back, like the buyers came in, pushed it up, then you get your buy signal. Slight little retrace, right? And nobody would be looking at the monthly or the weekly chart. Let's see. There you go. So this week you finally get a nice buy signal. So you're getting it on the daily, you're getting it on the weekly. That's confluence. That's what you want to see. That's exactly what you want to see. There's the 4 hour. Obviously you knew that was going to be a rocket, but you can pick these things up. But the point is you have to trust your chart. Right? If you're looking at short time frames, this is the 4 hour. And look how volatile it is. That's hard to manage. Even trading spot, that's hard to manage. Nice clean signal off the daily. Clap, 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 and let's hope that this continues for you guys. And what will price look to do? It's going to look, first off, it's attracted to this like a magnet because that's where buyers and sellers have shaken hands in the past. Well, now we're there. Almost. So what do you think it wants? It took out this high. It's probably looking for the next one, which is over here. And if it has enough momentum and keeps moving higher, it's just going to look one of those highs at a time. If you break of course, you guys know what happens, right? If you break the point of control to the upside and get on the north side of this value area and start getting into that gap, if enough money comes in, that's the type of thing that really moves things higher. But it doesn't happen in a day, right? Don't expect, you just can't expect that in one day you're going to see life change, right? It happens from time to time, but don't get hung up on it. It's a process, right? That's why we do this, so that we learn. This is a nice clean signal, and hopefully this goes on a run. If it fails, what happens? Well, first thing you're going to want to do is come back and test the T line and or the 5 EMA. So if it, is the horse a little bit far away from the barn? In other words, from the T line and the 5 EMA on the daily? Yes, it is. And if it does fade a little bit, it'll want to come back and test those areas. That's what you want to see it hold, because you want it to hold on the north side so that you can be confirmed that you're in a proper uptrend. But I really like the weekly, getting a buy signal like this on the weekly. So is this level up here possible? Yeah. If enough money comes in, it is. But it's nice to see this. But it's really important to note that all of this consolidation is just pent up energy, right? People that were buying in here, they've accumulated a lot. They've wound this elastic really tight. So what happens when you have price go sideways for an extended period of time? Just as a quick example, you get all these averages kind of twisting together. Here you can see they separated because price took a bit of a move down sharply, and that fans things out. Where does the buy signal come at? In and around the 50. That's a nice candle right there, but boom, and you broke the 200. Like it wasn't even there. That's a good thing. That's a really good thing. So all of these moving averages, they come together like this, and then you get a reaction. The time it takes sometimes to see it or to get it can feel like an eternity. But when it does unload and opens up, like, you can see what happens. The opportunity to the upside is tremendous. This is one of those situations where price has been flat for a long time, and it could really rise. We all like those examples. We're going to look at B&B quickly too, because this thing, and look, maybe we're just going to look at green candles all day today, but because everything seems to be up. But anyways, B&B's been on a bit of a charge. And, when you're talking to your friends about, what you're trading and what you're buying and when you're buying it, maybe this daily chart is a real good example of what you can be using. Everybody wants to talk up here about, oh wow, this thing's gone parabolic, it's going to the moon, whatever the terms are you use, I don't care. But what's really important is when you got in. This is the safe entry on the daily chart for B&B. You have no idea what comes after your confirmation signal. You have no clue. All you know is that you're in this trade on the daily time frame as an example. And maybe you're buying spot, you're trying to buy low and sell high. That's what this is, buying low and selling high. At no time did our script tell you that you had to exit your trade. And it continuously kept you in. Now, we're big boys and girls, right? We can decide when we want to close a trade. These signals are entries long and entries short. Safe entries long, safe entries short. So just like you have an opportunity to make a decision like big boys and girls early on whether or not you want to buy, you have the same opportunity up top. So I'm not saying wait for your confirmation sell signal. When it starts to look like it's going to fade like this, it's okay to take it off. How do you know? Flip on a stochastic RSI and a Fisher transform. Most of you are using MACDs anyways. All these lag. However, stochastic RSI typically goes first. That's why I stack it there, followed by the Fisher, followed by the MACD. So when you see this kind of big green candle, when you start seeing that, that's probably, you know, three red soldiers. You might want to take a pass, because even sooner, because you can see price is fading. You can see that you're losing the momentum, right? And you don't have to think about it too much. You had a safe entry long and you took it, and you had a fantastic trade. Nothing lasts forever. Nothing goes straight up and straight down. You know, after nearly a month of being in this thing, you would feel comfortable taking your profits off, or what's remaining. And the chart is telling you that it's exhausted. There's your next signal. Maybe you only want to take longs. That's okay, right? You don't have to take the shorts. There's your confirmation signal long. Did you have an opportunity at this impulse down to take a shot early? Yeah, you did. That's the big boy and girl decision. There's your confirmation. And here we are today. What does price want? Note the divergence, which is telling you you've got more momentum. The wider the gap, the more momentum. Same on the downside. Of course, it wants this. That's what it wants. Right? That's all. It's just current price looking for past price. And this could, you know, here we have a nice move higher, a respectable retrace, and then the next leg up. Sounds reasonable to me. Basically, you're getting a continuation from the 20-day. A respectable retracement, and then a continuation. And if we run fibs, just out of curiosity, because I haven't done this, $50 retracement to the penny. That's bullish, actually. You know, quite often don't we find that they cut to 618 or lower, right? This is really 50%, and then boom, it took off. So what's up here that's going to make it a draw for price? The upper value range. Still bullish. You know, move up, retracement, move up, take out the high, have another respectable retracement, and hopefully the beat goes on. What's the vulnerability to the downside? Maybe we just hypothetically, you get up here and you kind of double top, creating that 2 equal points in price, and then maybe you fade a little bit. If you're to fade back to the point of control and fade it, and lose it rather, you get into this gap. That's the downside risk. But the chart's still bullish. And if this was to roll over and take out the previous low, there you are. So you know, I find it's really important to be aware of the downside risk first. I used to always look for the opportunity, like most people probably, because you're counting the money before you've even made it. And once you start looking for the downside risk first, you're going to make a better long trade, guaranteed. You're not going to be able to help it. In fact, you might not even take some of the trades you're looking at, because by looking at the downside potential, you're like, you sketch yourself out and you move on. And sometimes the best trades are the ones you don't make. And that's why looking for your setup, the one that's most successful for you, the one you're comfortable with, where the moon and the sun and the stars line up, is worth waiting for. And if that means taking less trades, you're probably doing it right. Only take the trades that really work for you, where the setup is as perfect as it's going to get. You can't force you can't force it. You just can't. Take the trades that work for you. Take them off longer time frames, so you're not stressed out looking at tiny infinite measures of time. Right? But the chart doesn't lie. It gives you a clear signal in, and it just guides you through the whole thing. The horse is a little far away from the barn. We know that gap's going to close. It looks like it's going to roll over and let go. Our other indicators are telling us that. Time to get out. Don't have to overthink it. Just because it faded here doesn't mean that it invalidated anything that you believed, right? You made your money, move on. Wait for the next long. Make sure the trend is still working in your favor. This is the weekly of BNB. Looks pretty bullish to me. Even in here, back in June, it probably felt like the sky was falling, but you know what? Yet again, you came back and you got support from the 20, boom, big green candle, price moves up. And that divergence is an example of how much momentum is in that move higher. So the weekly chart's still bullish. Four hours certainly looks bullish. So translation, I guess you stay in the trade. You have no reason to get out. And this works on every time frame we look at all the time. It does not matter what we're looking at. Now, if we want to look at, let's look at ETH. Whoops. Because this thing has just gone nuts too. There's your daily chart of ETH. Doesn't look too dissimilar actually, right? A little bit of a respectable retracement, very small one actually, and boom, price moves higher. Now you're making higher highs. And probably making lower lows, or higher lows. So that means that's a bullish trend. And you have to know what the long-term trend is, because you don't want to be catching falling knives, for example, like trying to go long when price is falling. That's just a recipe for disaster. But this is some bullish looking stuff. And how do we pick these things up? Just back up our time frames, right? So you'll see trouble coming or opportunity coming that little bit sooner. We want to get you at the right place at the right time. And then once you're, use this as an example, once you're in the trade, then all of the things that we do to manage it, right? So we're watching the T line and the 5 AMA, making sure that the divergence is still there, telling us the trend is intact. We're assuring ourselves that we're getting support from something, in this case, a major moving average, which is the 20 MA. And as long as you can kind of make those determinations, you can feel comfortable staying in. And as soon as you feel uncomfortable, well, then the answer is pretty clear. You get out. The downside risk on this chart, if it was to roll over, is pretty significant. There's your upper value range, which is kind of telling you this is a little bit of a premium, and there's not a ton of volume here. Here's where the volume is. If you roll over, this is what you look for first, followed by, followed by. It's just one level at a time. And then repeat, play, repeat, play. Let's look at XRP, because everybody wants to look at XRP. There we go. We'll start with the daily. So we've obviously been in here before because we've drawn this line for some support and resistance. Not like the other charts we looked at, big move up. Look at all that divergence, and all that stuff is momentum, right? And then what are our little kind of signs of reversals? Points and flats, right? Especially on these like short-term indicators, because the short-term indicators respond quite quickly to changes in price. Like the 5, for example, is probably the best one I could use. It gives us not only a point, but it starts to show us, along with this big red candle, that there's some money coming out. It's not that hard. Right? Impulse move down, equal bottoms. That would be your stop area, and price moves higher. Just like this big red candle showed that, hey, you know, money was leaving and it turned our 5 EMA to red. Well, now money's coming back in and it turns it to white. You can see the divergences there. It's kind of our cheater entry, right? And then here's our confirmation candle. A little bit of a retracement. Where do you find support? Is this the first time you test the 20? Yep. What's that mean? You're more inclined to get a bounce. And here we are. You know, if we wanted to add to get an idea of where the 50 and the 200 are, we're well above them. So we're bullish for sure. We're within, it's not like we're floating far away from the 20 like we did up here and we're thinking, oh shit, we're going to come back. That's not what we're doing. Got room to move. This would be a target. The next previous wave's high, followed by the one before that. Now, what else could we do in here just to kind of help us with, because a lot of these charts we're going to refer to over time. Well, why don't we just, because we can, oops. Does this trend line mean anything? Not really. But whenever I have an opportunity to kind of connect equal tops like that, I tend to do it. I don't know at the time if this is going to be relevant or not. But why do I do it? Well, this is why. That's oil. That's the chart we've seen many, many, many times. This line was drawn here back on the 1st of April, 24. Had no idea. That's all it was just an opportunity to connect these 2 points. That's it. Yeah, no, I had no idea if it was going to be relevant or not. But these are the things you do when you're doing your analysis, or at least I do. This was going to be important, right? Long term, I believe that there was something going on that would lead price lower. And that, you know, if price continued to break down and break levels like I had anticipated, it would lead us back in time to here. But there's a reason that it's there. It just didn't get picked randomly. It just didn't fall out of the piñata. There's a reason that we chose that level. Right? And every time, now imagine this is a weekly chart, so a significant period later, September, now you're into April, then into July. When you see that again, almost to the penny, you're like, huh, that's a little more than interesting. That's a gravestone doji, right at that trend line. I wonder what else is in there. Oh, there we go. You failed the 200 on the weekly. You wicked it and ran away. Like you saw the Loch Ness Monster or Bigfoot or something. You just ran. Trend line relevant in this case? Yeah. Got a little jumpy through here, but look again. Wicks it and runs away. It's not a perfect science, right? You're not going to be to the penny all the time. That's not the point. Just like picking tops and bottoms is not the point. The point is to keep you on the right side of something. This is just a weekly example that takes a long, long, long time to play out. A lot of you think that the 15-minute chart is a long time to play out, right? But all of this stuff repeats. Sometimes this won't mean anything. That's okay, right? That's okay. But you have to be prepared when you're sitting in front of your screens and you're doing some analysis on things that you want to buy or trade. You have to have some understanding of what you're looking at and where it is. How many people bought oil in here thinking that for sure? What are they looking at? They're looking at this level in here, right? That makes sense? $92? $94? This wick cut right through the bottom of these candles and right through the tops of these. Okay. But people bought in here thinking that it was going to 100 and up. They thinking, hey, we're going to go on and maybe make new all-time highs or something. And that's not the case. The chart tells you it's not the case. You can choose to listen or not to. I don't care. Doesn't cost me anything. But the reality is you all are capable of doing some very simple things that can save you a lot of money and make you a lot of money if you let it. Stay out of the weeds, right? Don't get lost in the thick of thin things. Keeping it simple is often the best and only way to get through this stuff. You don't have to reinvent the wheel, right? It's all you have to do is just follow the chart. That's it. Let's look for Solana. Weekly chart of Solana. Now, a lot of these coins, you're starting to hear talk of ETF potential and all this stuff, and that's a whole other conversation, and I'm not going to get into those weeds. We just read charts, right? That's all we're doing here is reading the chart, not into speculation. What did we talk about before about the upper value range and lower value range on the volume profile? It carves out a respectable range for you to trade. Right? If you identified this as a top, if kind of been in these streams for more than 5 minutes, if you realize that that was a top and you were going to short it, just as an example, even if you took that signal off the daily, which to many might feel late, this is one big downtrend. Green candles are just green candles in a downtrend. That's all. And how do we know that? Because our chart tells us that. We're not doing anything fancy. This is chaos, but just another opportunity, obviously, to go short. We've talked about this before, right? When you get these big impulses up in after a major move, quite often you see this. It creates these, we talked about the 2 equal bottoms. Well, here's the 2 equal tops. That would be your stop, and it gives you an opportunity to re-enter the short. Now, prices come all the way back to the lower value range. This is where we would want to see it come back to and stick. Fades it a little bit, that's okay. Another nice move. Here's your safe entry. Basically actually gets you in at the lower value range, and price marches higher. You top out where? At the upper value range. So this is a very organized move, in my mind. Right? So here you wick it again. We've showed this before. I think we've showed it on Bitcoin, right? There's a level that you're trying to break through. You can't do it, you wick it, and you run away. The chart will tell you when it's ready to roll over. And you're probably thinking, you know what, that's a good time. And this would be a confirmed short. That's what that signal is. And guys, how many times have we seen this before? Impulse move down, and you can tell it's that impulse momentum move because it spreads out the T-line and the 5 EMA. So you have impulse move, and then sideways back to these levels, which what happens? Price goes down. This is not bullish. When you have this big move down and then you go sideways, that's not bullish. That's bearish. And then price dumps, and then it repeats again. Because none of what we talk about here on any time frame is final. Right? It's always moving. There's a constant ebb and flow. And that ebb and flow is where you make your money. Don't be pissed off that it happens. Embrace it. You want that ebb and flow. You want price to fall so that you can monetize it. Because you have one job. That's to monetize the chart. Up or down. And if you only want to make long trades, that's okay. We're showing you here, obviously that's a real nice early entry, and it comes from where? The point of control. Let's back this up. When you get moves that come off of areas that have provided support and resistance in a happy place for price in the past, it's usually a good thing. Just chatter, chatter, chatter along the point of control, don't break it, and then boom. But where did you get your opportunity? Right back here. Horse got a little far away from the barn, and you retreat and retrace. And what kind of a retrace did it give us here? Just out of curiosity. 618 to the penny. Anybody, you guys can do this. I know you can. Like, this is really fibs, fractals, and filters. That's all you really have to understand, and it's not all that complicated. The Fibonacci's are kind of giving us those areas that price after a move may like to come back to. And for some reason in crypto, it usually works quite well. Like, you'll find the areas that price come back to respect really well fib levels or points of control, anything. Technically, it trades quite accurately. So right back to the 618. That would be a number that we would have in mind, right, as a target on a pullback. If we were shorting this, we probably would have talked about shorting it to 618. and you you would have been bang on. Get a bounce, chart's still bullish. What does it want? That range up there. So that, you know, the fibs work, and they work on any time frame you want to use them on. And the fractals, that's the time frame element. 15-minute, hour, 4-hour, it doesn't matter, right? You can monitor the chart fractally, right? And an example of that is, and hopefully you guys can see this, it is a 3-screen view from TrendSpider of United Health, right, which we've talked about several times. And what you're seeing, a 15-minute, a 1-hour, and a 4-hour. And remember, everything is fractal. And what we're looking at here is, of course, this is upper value range, by the way, and lower value range. This thin line in here is a VWAP, just so you know. The purple is the point of control. So you get a nice bid on United Health on the 15-minute candle. This would have been on the 7th of August. You break the 20, and that's, you start to get some divergence, right? Well, when we look at this 15-minute time frame, we see the 50, we see the 100 MA, we see the 200 MA, and those are our targets. And as price starts to move up on the 15-minute, you get a little bit of resistance at the VWAP and the 200, and that's to be expected, but the chart is telling us, because that divergence is there, that it's still bullish. So you start breaking levels and reaching relevant levels to the upside. The point of control, this day you gapped up through the upper value range. Now that's on the 15-minute, but what does that look like on the hourly chart? Because again, we're looking for confluence, right? You want to know that, hey, I entered this trade on the 15-minute and it's starting to move higher. There's your support from the 20, right? Failed the 20 here, but what do? You tag the 50 to the penny and price pops, and we're waiting to see what happens here again as we go through that ebb and flow. But this is a bullish trend, right? But on the 1 hour, it looks like what? Well, here you go. You start to break the 50. We know that's good, right? That for me is a big deal. On any time frame I'm trading on, the 50 is really key for support and resistance. I want to buy at the 50. I don't want to long into resistance at the 50, but I like to buy at it when it's supportive. And on the 1 hour, you get right at the 50-day moving average and the 20-day moving average a break. So now you're trading on the north side on the 1 hour of what was once resistance. Well, you look up and what do you see? Well, you know the 100 is up here, and it's just another level for price to try and tag. And it's spent the last 4 hours trying to break through it. So if you don't think these things mean anything, think again. But this is just a fractal representation how price is moving. Here it is on the 15. The 1 hour is starting to show you that same kind of bullish movement, so that's confluence for you. And then if we go over here to the 4 hour, when we look at what's going on, hey, we're getting a green candle basically right at the lower value range, and the 5 EMA with support of the 20. Like, this is nice. This is what you want to see. And what do you think we're looking for on the 4 hour to the upside? The 50. That puts it at 274.39 on the 4 hour. What's 274.39? Right in here on the 1 hour. So maybe as time and price have an opportunity to move together, that the 200, you can see it's arcing down, will find price at 275 or 274.39, somewhere in here. Quite possibly. if you get a bounce here, there's your VWAP and there's your volume gap on the 1 hour, so you can see how price can find that level. And this is just a real good example, and again, here's the 15 minutes starting to show that it might be getting some support from that 20. Just a real good example of making sure that you manage the trade properly. And you can see when you're looking at these 3 time frames, you can see ahead of you and you can see behind you. All right? And jump in if you have any questions, guys. Don't be shy. Okay. Now let's look at, because we were taking requests earlier, so here is ETHFi. Excuse me, and it's an alt, right? So you have to remember that if you're trading it and you're using any sort of leverage, that it can move at the speed of lightning, so you really got to dial it back, because a little goes a long way. You don't want to find yourself feeling like it's 200 times on Bitcoin or something like that. So just dial that stuff down. And this thing gets wicky, so the wicks can be problematic if you don't have stop losses in place, and you have to keep that in mind. This is a daily. So, obviously a big move down. It's had a little bit of a boost up in a heartbeat. And then you can see that the upper value range yet again and lower value range has kind of formed a nice box for you to trade in. So what do we do it on the daily? We want to find out where the trend's going. There's your safe entry. We had an opportunity on the impulse down to catch a low and get a little bit of a head start. But there's your safe one. And we're trading on the north side of all that stuff. So yeah, you're bullish, right? What else are we looking at? Well, we're looking at the upper value, the point of control, and we're looking for the previous wave's high, because that's what we're trying to take out, right? If we're gonna move higher, we got to bump off all those previous ones along the way. So here and here, and ultimately over here. Break that, and of course you start looking seriously to the upside. So we're in a bullish trend, and that's all we know. Let's just dial it back to the 4 hour. Be interesting to see on the 4 hour if you get a buy signal in here. And I know Delatoshi, I know you're asking about this. So that's what I'd be looking for on the 4 hour to see how this plays out. You can see at the point of control, it gets rejected quite consistently in here. So if you get a buy signal here on the 4 hour, and you start to break through those levels that have been problematic in the past, then I would feel good about looking to the next level up. However, if it fails, this is actually a good sign, right? Because this is oversold and it looks like it wants to move higher. But if it did fail here, let's say it rolls over. If this is a failed breakout, you're going to want to take out the previous wave's low. So you're going to have price come up, challenge that, fade, fall into this gap, and that's how you get back down here. If it doesn't hold that, well then you just continue to look for the next level down. Start with structure, right? There's no moving averages on this chart, but it's really easy to start with structure. You're just finding areas where there's been some consistent support and resistance. It doesn't have to be perfect. Right? It's never going to line up exactly to the penny. But you want to make sure you're close. Because now that you're kind of trading in a range, or accustomed to trading in a range, you're going to want to further define what that range is. So let's say this is kind of support and resistance, and it's now acting as support. You gotta like these little double bottoms that formed here. Let's look to the upside where we would find something similar. So what am I doing? Well, I often like to connect the 5 EMA and or the T line when it works, but I'm using that as a guide because it kind of, I don't know if you can see this, but it literally bottoms out at that level twice. Again, in here, it cuts through the tops of these candles and these candles perfectly. There's my next level. So this is what I'm trading in. And just start to box in and out price. You're going to track and trap price. And then once you have it where you want it, you trade the crap out of it. But it helps to understand how it got into these ranges. Right? And again, we're not using anything other than a volume profile and just identifying some structural levels. So, you know, this is clearly structural to the upside. That's clearly structural to the downside. And just trade through those areas. And if you're using leverage, make sure that the leverage that you're using is low enough that it can manage the slight retracements that will happen on this time frame. Like, so if you're using high leverage, this little tiny wick up here has washed you out. Right? So keep that in mind. Allow yourself to actually work through the trade. Don't over leverage yourself, because you never really get an opportunity to get any traction. And then as soon as you do, you're so excited that when the retrace comes, you're like, oh, you know, that's okay. And then it just keeps coming. And then before you know it, you have a bigger problem. So just keep the ranges and levels simple. Just look for support and resistance areas like this that you can box out. Keep an eye on the upper value range, the point of control, things like that, lower value range. And understand the ebb and flow of price. This is a 4-hour chart. These red candles are no need to panic. They're just simply red candles in an uptrend. That's all they are. And that's how you should look at them. Right? You don't need to be overly concerned about them. The only time you're worried about them is if you've used too much leverage. So again, don't let that be your problem. I think a lot of you are actually becoming quite good charting. I think the problem is the trading part where you're using literally too much juice. And I you know, we've talked about it before, so just dial that stuff back. Allow yourself the benefit and the pleasure of charting without that stress. This is for our friend Rico Moneybags, CFX, because he's kind of the guy that turned me on to this thing. And what we're doing is we're starting with the daily. Again, volume profile, upper value range. The red's the point of control. That's the lower value range. Got a nice clear buy signal after what? That same kind of consolidation that we talked about at the beginning. And price pops. And it really pops in this case, right? Like, you have no idea that after these series of dojis, you're going to get this massive green candle. You have no idea. You're just hoping to break through the point of control and maybe get into the volume gap to start working your way higher. You didn't know that it was going to be a giant parabolic candle. And that's why it's important just to trust the chart. Right? There's your daily signal. Take it. Price is it staying above these levels? Yes. Then sit tight. If it's going to break down, the chart's going to tell you that too. And because you're mitigating risk and you're using proper stop losses, taking profits when appropriate, you're very well insulated and protected. But even on this nutty chart, when price pulled back, what happened? Right? Everyone else is going, oh no, I don't know what to do, I don't know what to do. Because they're just looking at candles. And then you're forced to be some kind of godly candlestick reader. That's not me. I like trends. So just by looking at the right things, the chart's going to tell you what to do. And in this case, it's just telling us, just stay in the trade. Right? That's all we need to know. Up here, obviously gets a little erratic, but this is what's concerning when you start to roll like that, and you get out. And then, you know, again, there's your confirmed sell signal down. What's the downside risk on the daily chart? You fall into this gap. If you're looking for past price, looking for areas where, hey, price might be able to sit down, how about this? Somewhere in here. Where does that align with? Right at the bottom of this little gap. That's the risk. Fail that, you know, well, that's a big problem, because we know, we've been here long enough, that these big candles, whether they're red or they're green, are filled with fairy dust and air. There's nothing inside of them to hold price up when retested. And that's why when you have price rolling, and it seems to be like, you know, well, how did price fall? Well, slowly at first, boom, then really, really, really fast. That's why. And of course, everybody has that friend that says, you know what, as soon as I hit the button, you know, price fell off a cliff. And that's just because they weren't aware of where they were on the chart. So this is a bullish, you know, a bullish chart a little bit. It's certainly catching a bid anyways. I don't want to say bullish. It's got to figure itself out. If this holds and you start working up here, you're going to create that kind of double toppy thing. I think that's what it wants. Everything is just so bullish right now. And there's not much you can do about it. You just got to trade what's in front of you. And there we go, right? The stuff you want to catch on the daily chart that's going to run, chances are you're going to pick it up on the shorter time frames first. And this is a really good example. That really does, again, this is a 1 hour chart, so that's a pretty exhaustive run. And you start to see your buy signal. At this point, so I'm going to throw an average on here. There you go. So at this point, we've had all of this as resistance on the way down. So you can't lie to yourself. What you're hoping here is the breakout candle, and not another of what you see up here where it hits some resistance and then rolls. But you don't know. Is all you know is that, hey, I just got my confirmation buy signal on a 1 hour chart. Oh crap, it looks like I made the wrong decision. Right? That's going to happen. Right? Everyone's going to say that when they see this, when they see a red candle show up. But you don't panic, because you know that that divergence is telling you, and there's more of it, by the way, that you're good. Well, you held the 20, so you feel better there. And then what we expect to happen starts to happen. This was very clearly like a real, I don't want to call it a capitulation, but every effort it made, resistance, 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 resistance. Now, just like we showed on one of the charts a few minutes ago, you know, here's your early entry, and you look up and you see what? Well, I see the 20 here, which is great. Bounced around it for a few hours, and then boom, off to test the next level. Right? You're currently testing almost to the penny that 50-day moving average. What are we hoping for? Well, we're hoping that this doesn't roll over again. That's what you're hoping for. But what do we know technically? Is this the first break of the 50-day moving average on this time frame? Yes. So what are we expecting here? we're expecting a little bit of resistance. Right? The first attempts are more likely to fail. Right? So we know that's a possibility. But are we in the driver's seat on the 1 hour chart? Bloody right we are. What do we look like on the 4 hour? What are we looking for? If we're looking up, is this, I love this doji at the bottom of this pullback. Big green candle, basically eats the last 3 up. And you can start to see what happens. 5 EMA goes white, telling us that, hey, there's some money coming in. We don't even have a confirmed buy signal yet. But what I know is there's my 20, there's my 50, there's my point of control. And that's going to be a draw for price. So my 4 hour wants to run at 0.20465. 0.20, what did I say, 465? Is where? Right up in here. So the bottoms of this, the tops and bottoms here, this wick, and then in through here. And that's just on the 1 hour, right? But this is just what I'm looking for. So remember that United Health chart we looked at with the 3 time frames? That's what we're doing here. Right. Find that confluence and then just, okay, I understand what you're looking for on 1 time frame. It'll help me manage this trade. Ultimately, what we want to do, I just want to take out, I want to find the 20. I want to get a buy signal on my 4 hour. That's what I really want. And I want my 4 hour to start to run. I want my 4 hour to hit the 20, hit the 50, and look for the point of control, right? Take out this high, take out this high, take out this high, and then run for the upper value range. Oops. And of course, that high. That's, that's the dream, right? That's how you want that trade to unfold. And if you're really lucky, when you get to the daily, that 204 number is basically the 5 EMA and in around where the 20 is. So if you break that area in there, you're going to want to test higher. So this is starting to look like, those 4 red soldiers, and then boom, we're going to hopefully catch a bounce here. Oversold. MACD moving average and signal line is still above 0. More bullish things will happen to you when it's up here than not until it rolls over. That's a different story. Hopefully your stochastic RSI kicks up, drags things with it, and that's how you kind of get back up to test those highs. And in full disclosure, I'm in a trade off the 1 hour, so there's a reason why I'm watching it. So, yeah, that's what I'm looking for, right? Break the 20, break the 50, take a run for the value range, head for the 200 and the POC. My Fisher transform is doing what? Does it look like it still wants to go higher? Yeah. That's why I love this thing, because it filters out noise. Fibs, fractals, and filters. Filters out noise. Uses a Gaussian channel to do that. Just have to see on the 1 hour, because this is the first touch on whether or not we fail. And if we were to come back to the 20, so this is the first touch, let's assume it fails. You don't hold the T line or the 5 EMA, where's you going to come back to? The 20. And is this the first touch of the 20 since it broke out of it? Yes. And they too are also more inclined to get a bounce. In this case, a bounce on the way down. Hypothetically, if you were to get that bounce, in and around here, that would be a reasonable pullback. And then you would take another run at the 50, and then it wouldn't be the first touch, and it might push through. This is a pretty green day. Maybe it's going to push through anyways. But that would be, I'd be more comfortable with seeing the first option, actually. because I like the more organized moves, both up and down. But we're just, again, trying to keep it super simple. You know, I've spent a little bit of time listening to some of you talk about your trading experiences, and then some other places that maybe you're getting information, and it's like, it's too much. This is a language. You're just learning a language. Math is a language. Technical analysis is a derivative of mathematics, and it's a language unto itself. The market is a real-time representation of what money is doing, not what people are saying. And we get hung up on what the people are saying part, not on what the money is doing part. And I focus on what the money's doing. That's more important to me. Do I believe, or am I comfortable, maybe that's a better word. Take the volume profile off. This is the Dow Jones. The daily chart, here's the monthly chart, or sorry, weekly chart. And, you know, obviously there's a reason that that line is there, but don't worry about that. The point is that am I comfortable with that chart? So the rational, reasonable thing inside me goes, no, I'm actually not, because I can't find a reason that would to rationalize why it's up there. One that I'm comfortable with. But this is when you get inside your own head. Is this a bullish chart, and has it been a bullish chart? Yeah. This is the weekly, by the way. So you have to trade what's in front of you. And you have to put all that other stuff aside and tuck it away. Check it at the door, you know, whatever phrase you want to use. But you have to let the chart help you with the decision making. It's not for me to say whether you use it as the source or part of a source. That's up to you. But it should be part of your mix, because the chart does not lie. And this is a, you know, let's go to a monthly if you have to make it even more obvious. The chart doesn't lie. Look at the divergence of this stuff. And remember, this is on a monthly basis. So, you know, for the better part of a couple years, even this candle didn't kill us, right? Didn't break any bullish momentum up here, which is amazing. The wick retraced more than 50%, but yet the trend held. I don't know if this is fair. Wow. It's almost 50%. It's crazy. But it held. And for the last 4 months, it's just been moving higher. We use the same rationale. What does it want? It wants the previous wave's high. And if it hits it, and, you know, does a little bit of a fade, but holds the metrics that we use to determine trend, well, then I guess you have your answer, right? It could just be takes out these highs and then maybe makes a slight retracement, but holds this bullish kind of setup, and off you go. The beat goes on until it doesn't, right? And this is why you have to have a handle on the downside risk. You really do. You have to know what's going on around you. And let's look at, this is US dollar, or DXY, dollar index more accurately. Any idea where you might, what time frame you might kind of pick up some cues to larger moves on the daily? Maybe if you sniff around the hourly long enough, it'll show you. Right? There's the 4 hour. You know, are these levels and ranges that we put in here previously, or that I've drawn, are they absolutely perfect? No, I don't expect them to be. I'm just looking for ranges, and I'm trying to box in price so that I can make a better determination with other tools what it may want to do, and I want to be there when it does it. 3 a.m. today, you get the doji, and boom, your 5 EMA goes red, starts to tell you that there's money leaving. A little more clear, there it is on the 1 hour. Maxed out, and then just sideways, 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 rolled over. Little Batman ear thing going on, and then price rolls over. What does it want on the way down? Well, it's probably just looking for past price. Somewhere in here where it's been before. Just like it's done in the past. And it doesn't matter the asset, right? Any asset, any time frame, any market. And we do this over and over and over again, weekly. And you watch things that happen that are completely what seems to be unreasonable, but it happens. If you remember the layer chart, everyone in the world was, wanted to short the chart. And then when they did, or when it did roll over, probably missed most of it, caught some of it, and then they've been waiting the long end ever since, and it's just not happening. Like, this should be telling you quite clearly, let's just stretch it out to a weekly, you're not getting anything. Look at, this is still a very, very bearish chart. Even though you've had a heartbeat on the daily, you look at the longer time frame and you're like, no, it's not ready yet. That's all. It's just not ready yet. And when it is, you'll know. How about Monero? We looked at Monero last week, I believe, because we wanted to see this big melt that's going on, right? Do we know why? I don't know. Do I care? Not really. Because all I know is we got to sell a short signal. Do you take it or not? It's up to you. Right? You get to make a choice. Life's about choices. You get a signal, you either take it or you don't. Well, if you take it, it's a runner. What do you think this is looking for? It's looking for somewhere down here, I think. It's going to come all the way back to the upper value range on the weekly. Because everything is fractal, right? Everything is fractal. So hopefully by just showing you to keep it simple, right? You don't have to clutter your chart all the time. Now maybe you're looking for a target, so you're going to flow an average, stick an average on. That's okay. But just keep it simple and keep your thinking simple. Keep your brain clear. Right? If you make mistakes, move on. Make sure you're documenting them in your journal, good and bad, so you can reflect later. But just enjoy yourselves, right? It doesn't have to be stressful. Keep it simple. Take the signals. Don't over leverage yourself. Mitigate the risk by putting in good stops, and you'll be fine. Any questions at all? If we don't, then I have another meeting to get to, so that would be okay. Anyone, guys? If not, I'm going to wrap this up because I do have to get to on another call.
Thank you, man. Thank you so much.
Oh, you're welcome, bud. We'll see you guys on Thursday, and we'll pick this up where we left off. But in the meantime, until then, just try these very simple things, right? Go back and watch this video on YouTube or in the FEG group, wherever you want to watch it, and just try the simple stuff, right? Contact me to use the script. It's going to make your life so much easier. Right? But until next time, guys, I'm going to run for now, and thank you very much.